Hello, my name is Sean from the Global Life Settlement Exchange. We are the world's first free life settlement auction marketplace. Today, I'm going to talk about understanding the different valuation methods used by life settlement providers. When a policyholder decides to sell their life insurance policy through a life settlement, the amount they will receive for the policy is determined by a valuation process. Life settlement providers use different valuation methods to assess the value of a policy and determine the price they are willing to pay for it. Here are some of the common valuation methods used by life settlement providers. The comparative market analysis method is used to estimate the value of a life insurance policy by comparing it to similar policies that have recently been sold. The provider will look at policies with similar characteristics, such as face value, age and health of the insured, policy type, and premiums, and use those sales as a basis for determining the value of the policy in question. This method is similar to how a real estate agent would use comparative market analysis to determine the value of a home based on recent sales of similar homes in the area. Life expectancy evaluation is a method that involves analyzing the policyholder's health status and life expectancy to determine the value of the policy. The provider will typically hire a medical professional or underwriter to assess the policyholder's medical records and determine their life expectancy. The longer the policyholder is expected to live, the lower the value of the policy, as the buyer will have to wait longer for the payout. The net present value calculation method involves calculating the present value of the policy's future payouts. The provider will estimate the expected future payouts of the policy and discount them to their present value using a discount rate. The discount rate takes into account the time value of money, inflation, and other factors that can affect the value of future payouts. The resulting value is the net present value of the policy, which the provider uses to determine the price they are willing to pay for the policy. Settlement offer comparison is a method where the provider compares the value of the life insurance policy to the potential settlement value of other financial products, such as annuities. The provider will compare the expected payouts of the policy to the expected payouts of an annuity or other financial product, taking into account factors such as the policyholder's age and health, interest rates, and inflation. If the expected payouts of the policy are higher than those of the annuity, the provider may offer a higher price for the policy. Discounted cash flow analysis is a method that involves estimating the cash flows associated with the policy and discounting them to their present value. The provider will estimate the future cash flows of the policy, including premiums and death benefit payouts, and then discount them to their present value using a discount rate. This method is similar to the net present value calculation method, but it takes into account the cash flows associated with the policy, rather than just the future payouts. Global Life Settlement Exchange, your trusted partner. Consider listing your policy on our free, no-obligation auction marketplace, so that buyers can compete for the best deal available depending on your particular circumstances. Global Life Settlement Exchange, GLSE, is a marketplace that specializes in life settlements. We have a thorough awareness of the market and assist policyholders in selling their insurance policies for the highest price possible through a transparent auction. The first free life settlement auction marketplace in the world, Global Life Settlement Exchange charges no fees to sellers. The process is simple, and there is zero fee and obligation to the seller. You just need to provide your policy details to us, and that's all you need to do. You will receive the highest offer from the market in a few weeks or so. Unlike traditional brokers, GLSE does not charge a fee for its services. This means sellers keep more of the money from the sale of their policy, which can be a significant sum. Even if you have already hired a broker, a seller like you can still acquire a second opinion. GLSE gives the seller complete control, allowing them to select the best offer without being constrained by middlemen, brokers, obligations, or fees. The traditional process of selling a life insurance policy involves working with brokers who have access to buyers. These buyers determine the value of the policy, leaving sellers with little control. However, with GLSEs, sellers have complete control over the process. They can choose to accept or reject offers as they see fit, without any obligation or fee. This puts the power in the hands of the seller. Life settlement was predominantly a buyer market, where buyers determine the value of the policy. However, GLSE is shifting the balance of power to the seller. By providing an open and competitive marketplace, GLSE puts the seller in control of the process. The seller can choose to accept or reject offers as they see fit, ensuring that they receive the best possible value for their policy. In conclusion, Global Life Settlement Exchange is revolutionizing the life settlement market by increasing transparency and putting the power in the hands of the seller. With GLSE, sellers can receive the highest possible offer for their policy, keep more of their money, and make an informed decision about whether to sell. Our zero-fee platform provides a no-obligation opportunity for sellers to explore their options, and the elimination of middlemen ensures that sellers receive the full value of their policy. GLSE is transforming the life settlement market, providing a fair and competitive platform for sellers to receive the value they deserve.
Thanks for watching. If you like our video, please hit the like and subscribe button to support us.